Warning: this video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all. Right, hello and welcome to Camel Finance. I'm your boy Camel, and things are starting to improve in my humble opinion. I'm going to show you some very interesting things to do with Bitcoin as always, and we're going to talk a little bit about the upcoming CPI print tomorrow. Before we get to all of this, I wanted to talk about this principle of rhythm. This is one of the MATIC principles. Everything flows out and in. Everything has its tides. All things rise and fall, and the pendulum swing manifests in everything. The measure of the swing to the right is the measure of the swing to the left. Rhythm compensates. So this principle of rhythm embodies the truth that in everything there is manifested a measured motion, a to and from movement, a flow and an inflow, a swing forward and backward, a pendulum-like movement, a tide-like ebb and flow, a high tide, a low tide between the two poles manifest on the physical, mental, or spiritual planes. So the reason I bring this up today is because I have noticed the pendulum has swung into an extreme. Based on my own subjective observation, my own personal experience, I have seen this pendulum in the markets, in sentiment, swing completely to one side. I've seen people infighting, arguing, being very toxic all over the place, not taking accountability for their own actions. And largely speaking, this range in Bitcoin has worn people down to a nub. But in life, like I said, everything has a rhythm, okay? When the pendulum swings one way, it's only a matter of time before that pendulum swings back to the other. There is an ebb and flow to everything. And needless to say, this is especially true in markets. So I do believe we've got the best shot that we've had in a while to see this pendulum return back in the opposite direction. I do believe we are now sat at a point in time where we have the best chance we've had in some time to allow this principle of rhythm to continue. And our job is to observe the rhythm change, be aware of its presence so that we can capture it and use it to our advantage. The rhythm is going to exist whether we choose to acknowledge it or not. The rhythm is there to be either ignored or used in our favor and for our benefit. And so I am making the case that it is important to pay attention, because if that pendulum shift is about to occur, a lot of people who are not paying attention will not notice it until it is far too late. If this pendulum is about to swing in the opposite direction, then the sooner we can identify that pendulum swing, the sooner we can use the momentum of the shift to our advantage. So we are just one day out from the CPI print. And Trueflation currently has us on a 1.17%. So this CPI print is going to be very, very, very interesting. Of course, Trueflation updates daily, it's real-time data, and therefore is usually about a month ahead of the government reported rate. So what I've done is taken a look at what the Trueflation print was around 1 month ago. So you can see here, 11th of August down the bottom, and we were at 1.49%. So I do think this is probably the first CPI print that we can expect to see a significant shift, a significant drop in the inflation print, in the CPI print. And I do believe this will give markets a chance to have a strong rally off the back of this lower than expected CPI print, largely speaking because markets are forward looking. They're going to start to look ahead of the rate cuts. They're going to start to try to price looser monetary policy. And we're even going to see them look over the hill and start to wonder if higher earnings can be coming for many of these stock companies who will at some point in the future be able to get money cheaper. To be clear, I still don't think we're cutting into normalization. I still do think we're cutting into a slowdown, and thus I still think it's going to be wise to be looking for tops in the not too distant future. But if this CPI print can come in lower, particularly as the majority of the market still believes inflation is sticky, I do believe that we will be able to have one final chance to see markets respond very favorably to this CPI print. And of course, the inverse is true. If this print comes in hot, if we're in the high twos or even a 3 print is seen, then I would think markets are going to react very, very bearishly to that. So tomorrow, during the CPI live stream, I think we're going to have an awful lot of fun. As I said earlier, to be clear, this doesn't mean I don't think we are not still looking down the barrel at a slowdown. And largely speaking, aside from all the unemployment data, this is because it's the consumer that drives the business cycle, okay? And consumer credit came in yesterday at over double the expectations and nearly triple the prior readout, okay? This is insane indeed. And for anyone wondering, consumer credit, okay, is revolving credit, which includes credit card balances, and non-revolving credit covering loans for vehicles and education. So the consumer continues to be in worse shape than ever. And of course, if they're in worse shape than ever, their focus is going to be on paying the bills, it's going to be on putting food on the table. and they are going to cut back on spending. Of course, when we cut back on spending, we typically see that manifest in recessions. So I still don't think anything changes for the medium to long-term outlook, but I do think possibly if we can get a shockingly low CPI print tomorrow, we might have one final hurrah to get behind in the stock market and hopefully in Bitcoin as well. There are still a lot of uncertainties out there. There's still plenty of things to look at and be slightly concerned about. Okay, we still have the biggest concentration bubble in history. The Mag 7 stocks now account for around 32% of the S&P 500, right near the all-time high. And many of these big name stocks, such as Nvidia here, are at critical support levels. Of course, support can hold, and if it does, then we might have a shot at seeing that last hurrah to the upside. But things like Google are not looking too hot right now, okay? You can see not only are we broken down from this channel, but this is also the 200 moving average in red. Not the kind of look you want to see if you are expecting to see major upside from risk assets. Now, if we draw a trend line here, it's entirely possible this week, perhaps on a lower CPI print, we do see a repair made and a breakout. Okay, this is entirely possible, and we will likely need to see this across the board if we're going to have a shot at seeing new all-time highs for the stock indexes. But objectively speaking, okay, some of these tendencies are not looking too good right now. Nvidia really on that knife edge could either break down from here, or hopefully we can see some kind of push to the upside. Time will tell as always. There's no point trying to guess. We'll just let the market prove to us which one it wants to do. And before we get into Bitcoin, okay, this is the biggest story in the world right now, and that story is China. Last time China was deflating this hard, remember we've been using China for a long time on this channel as a leading indicator for the deflation that we believe is coming in the US. And the last time China was deflating this hard, it was 3% of global GDP, but today it's now 20% of global GDP. This is undeniably going to be having effects worldwide and cannot be ignored or discounted. So is this a contagion risk? I think so. Starting to look an awful lot like that .com bubble bust. Meanwhile, over in the world of Bitcoin, things are starting to look a lot brighter. Like I was saying earlier, that pendulum, I believe, is starting to perhaps think about swinging in the other direction. So far, Bitcoin has just sneakily put in its first higher low in around 6 months. Now, for me to start to feel confident that we have got a chance at a bottom structure here, we do need to see a higher high above this local high from back here. But so far, this is very encouraging, especially if we can indeed see Bitcoin respond favorably to that lower CPI print. And I do think if we're going to break out, we're going to see some kind of bullish catalyst for Bitcoin. And I think it's going to be something like this, okay? Imagine this entire range for Bitcoin, all of this was just to accumulate supply to let one big player come in, okay? I would think that probably as we start to approach breakout levels, assuming we can do this, assuming the top's not in, assuming we're not going back to the lows or something like that, okay, I would think if what we see play out from here is something like this, a grind up and then a breakout, it will be on this breakout, it will be around this area that some kind of major catalyst is announced in the news. And based on all my experience of trading and observing these markets, I would suggest to you that we are probably going to see something akin to a company like Dell announcing that it's going to start to emulate MicroStrategy's Bitcoin reserve strategy. It could be a sovereign nation. It could be something that none of us can even comprehend right now. But I would think we'll see it in the charts before we see it in the news, okay? I would think we will see something akin to this breakout, like I'm saying, and then as we get that breakout, it will turn out that all of this range was just to allow some big players to get their orders filled. Meanwhile, speaking of big players potentially looking to step into this space, the world's fourth largest power company is looking into Bitcoin mining through subsidiary. So of course, this makes a lot of sense if you're a global power company. They all have a lot of excess energy that they have to get rid of. And if you hook up a bunch of Bitcoin miners, then you can redirect that excess energy and turn it into profit as opposed to blowing it off into the atmosphere or wasting it or whatever else. So under the hood, we do continue to see large players stepping into this space. Meanwhile, when we zoom out, okay, the charts continue to look pretty much on track to see continuation of upside for Bitcoin here. And when we take a look at the RSI breakdown, okay, right in this congestion area around the prior all-time high, we saw an RSI break from a parabolic curve before resuming to the upside, and that coincided with Bitcoin doing Bitcoin things. We saw the exact same thing here, okay, consolidation around the middle of the cycle, not too far from the prior high. We saw the breakdown of the parabolic curve for the RSI, followed by a final hurrah. We saw the same thing here, even in this mid-cycle shakeout prior to the C19 plunge, okay, we got the RSI turned down, and then we got that one final hurrah. And today, if you'll notice at the hard right edge, okay, we have already significantly broken down from here, whilst Bitcoin has been compressing in a range, excluding the wicks, of only around 20-25%, and showing relative strength compared to the prior times, because this is right around that prior all-time high level as opposed to the prior cycles that was slightly below the all-time high level. So again, when we zoom out, it's hard for me to make the case that this is a highly bearish structure, particularly as, like I said, I believe that pendulum has swung to an extreme and is due to return to the other side. And of course, the big question is, Camel, when alt season? And as always, I don't care, to be completely honest. But when we're looking at Bitcoin dominance, again, I continue to see people calling for a breakdown here. And maybe finally now is the time. We have indeed got bearish divergence, okay, across the board, oscillator making lower highs or the price makes higher highs. However, people have been posting these kind of breakdown charts the entire way up, and I still think, okay, I know it's not a popular idea, but I have been consistently saying this all the way since back here. I still think we have to be open to seeing as much as 70% dominance. So we know where I'm wrong on this idea, okay? If we get a true technical breakdown from here, something akin to this, okay, then maybe, just maybe, we will see rotation out of Bitcoin and into alts. Maybe your alts will finally do what you hoped and prayed they would. But if I had to bet on what's going to happen from here, I would suggest to you that possibly we are going to see Bitcoin move higher. We're going to see dominance move higher as well. And we're going to see this thing break out. That is what I think is the most likely personally. And again, whenever I say something like this, society turns to persecution of anything it doesn't agree with. It wants to burn down the messenger anytime the messenger tries to bring something that is against the grain. But the absolute truth of the matter is I've been saying the exact same thing the entire time. 60 to 70% was the target, and we haven't quite hit 60% yet. So, of course, I could be wrong. Of course, we could see this. And if you're an altcoin holder, that's what you want to see. But if we move to 60 or 70%, I see very, very, very few people calling for that. And I suggest to you that we may even see these bearish divergences resolve to a more bullish look. So be open to everything, of course. Meanwhile, for the Camel Crew, the big question is, can CPI tomorrow ignite this third and final blow off top angle in the stock market? If it cannot, okay, then we are probably going to have to be entertaining a more distributive type topping pattern. I'm even going to be looking to sell trendline breakdowns if we do get something like this. I don't expect much volatility or price action today. I really think the market is just going to practically be sat on its hands waiting to see that CPI print tomorrow. The Nasdaq is not looking too great, okay? Second angle violation, hanging around in no man's land. So we know where we are bullish, okay? We're bullish above the blue, okay? On a repair. We also know where we're bearish, and that is anywhere in this neighborhood and particularly below it. Very, very similar chart structure to Nvidia right now. Notice that. And the Dow Jones is looking not too bad, to be honest, right? Dow Jones holding up relatively well. Notice how we had the second angle violation, we recovered it, and so far, not only have we got, if we draw our eyes to this downward slope in red, okay, not only have we got breakout, retest, possible resumption, but we also have, if we draw our eyes to this second angle here, okay, we've also got breakdown, recovery, retest, possible resumption. That's also very bullish. And if indeed we can continue to see resumption from here, then when we zoom out, we might have even set our third and final blow off top angle. Okay, so it's all to play for in here. The Dow looking a lot better than the S&P and the Nasdaq, for example. The Russell 2K is still kind of hanging around. Okay, it wants to expand. It feels like it wants to, but I think people are just waiting and hoping to see that lower CPI print tomorrow. I do think if we get it, we scream higher from here towards my long-term target of 2,700. But equally, you know, the stop is choked up for a reason, and it's because there is downside risk here just in case we do miss. I think it's also worth pointing out from a cycle perspective on the stock market. Today's session, when it opens, will be day 25 of an expected around 40-day daily cycle. We are getting pretty stretched in this cycle, and if we continue to see downside into Wednesday's CPI print and Thursday and Friday, then by the time we get to Thursday or Friday, we're going to be on something around day 27, 28 even, and therefore I would be calling this the most probable top for this current daily cycle at least. So if we can't come and swing out of here, if we can't get a new high in the next few sessions, right, this week, if we don't print a new high this week, then the daily cycle is down until around the end of September, perhaps even early October. And needless to say, if this is what we see, something like this into a daily cycle low, okay, and then we zoom out, what will we have all the familiar symptoms of? Okay, we'll have all the familiar symptoms of no blow off top third and final angle. We'll also have all the familiar symptoms of a distributive topping pattern, the likes that we saw back in 2022. This is by far and away the most common topping pattern, okay? Something akin to this or this, right? You get the idea. Not a call, it's not a prediction. I still remain hopeful that we can indeed come swinging out of here and find that third and final angle, just like the Dow is kind of hinting at, right? The Dow is kind of hinting that it wants it. But as always, we remain unbiased and open to all possible outcomes. One more thing I think we should take note of, okay? If this is the third angle set, if we do get that lower CPI print, like I've been suggesting we will, and if the markets respond favorably to that, look how steep that third angle is, okay? That's a pretty steep angle, and that would project something akin to 6,400 by December. Of course, it could break down way before that or way after it. But if we are indeed in that final hurrah, then things should start to get pretty insane pretty quickly. I'm also thinking the VIX setup here is pretty clean, okay? So for me, miss the CPI print, start to react bearish out of CPI, and this will be me hedging in this neighborhood, okay? Something akin to this. And the inverse is true. If we can get CPI coming cold, the markets start to scream higher, then you would think that the VIX gets absolutely smoked to the downside, and somewhere in this neighborhood is where I'll be looking to get some hedges on. Notice the theme for today's charts though, okay? We're all just sat here waiting to see that CPI print. As ever, this is the most important CPI print of all time until the following CPI print. Gold is still working on a cycle low, still not quite confirmed it. Needs to trade above the highs to truly confirm it, but I think there's a good chance it's in here. I like the odds. And silver still kind of hanging around, again, waiting for that CPI print. And last but not least, everyone's favorite asset, Bitcoin. Okay, Bitcoin not looking too bad, right? Looks to have confirmed a cycle low. I got a position on yesterday in the members section, so the level 3 members were notified in real time. I did say that I'm not really super comfortable with this trade. I'm not really super happy with it, but my thesis for this long, okay, is if this really is a cycle low, then number one, we got very clear invalidation. If that's the cycle low, then any trade below that low from the 6th of September is invalidation. It's a hard invalidation on this setup. And as I was pointing out to members yesterday, okay, we went from the prior cycle low, something like 30% from this one here. We went something like 30% from this one back here. We went something akin to 26, 27, and from here we were about 20%. Okay, so we should be able to, even in the worst case scenario, get some kind of pop up. And then, as I was saying yesterday to the members, if this thing rejects at resistance, then I'll be thinking about moving the stop to break even, or just cutting the trade, or taking a bit off, performing some kind of damage control here. And similarly, if this thing was to break out from here, I might even be tempted to start to increase my exposure on breakouts, and again up here on this downward sloping red resistance line break. So probably getting a little bit ahead of ourselves right now. I certainly don't feel super confident about this, but again, all my analysis points to CPI being lower and the market's responding favorably, but this is going to be a trade that I monitor a lot more than I normally do monitor my trades. Oh, and that reminds me, we might have one of the wackiest cycle inversions that I've ever seen in my entire career. Okay, we might have inverted into a weekly cycle low and then just had a daily cycle low inversion. We might have a double inversion here, and I can't take credit for this idea. This is Andrew's idea. Possible that we inverted into the weekly cycle low and then inverted into daily cycle low 1 would be wacky but not impossible. And I said, look, this double inversion would be so wacky it just might work. So we might have had this half cycle low inversion to force a weekly cycle low, and then if indeed what we see come out of here is a huge, strong, violent push to the upside, we will have a half cycle inversion at day 32 from this daily cycle. So that would be pretty wild. I know Bob has just completely negated these counts here, okay? And he has this as the current cycle count. So about 60 days into here, about 60 days into here, negating the wick. And I don't really like that, to be completely honest with you. The other idea that we might have is a fake out failed cycle for Bitcoin. So for those of you that have this PDF on trading cycles that I wrote, you will know that down on page 20 is a section on nuances. And one particular nuance that I listed in here based on my experience of trading cycles was Bitcoin's fake out failed cycle. Okay, so during this fake out failed cycle, what we get is a cycle low, then a fake out to the downside that then usually resolves in a higher low. In this schematic that I showed here, this is a timing based cycle low as well. But I do wonder if that is what is going on here. I wonder if what we just did was have a cycle low, a fake out failed cycle at the half cycle low, followed by another regular 60-day cycle low, 60 days from here to here. And thus, this just counts as a fake out failed cycle. So technically speaking, we should be labeling the lowest low as the cycle low, but Bitcoin, it just seems to have this additional volatility. It just seems to have thinner order books, less supply. It's more susceptible to these liquidation cascades. Depending on what exchange you use, this may have been the lowest low on the close, or this may have been, it really depends on what exchange you're using and how thin or thick their books are. And that's why I put it in the nuance section for Bitcoin, because it is something that I've only ever seen in Bitcoin. So maybe that's what's going on, or maybe we've got the even more wacky inverted daily cycle into the weekly cycle low, followed by a daily cycle low inversion. Time will tell. So for now, I think it's best not to get too caught up on how we're going to label the cycles here or how we're going to identify this. I think it's best to just let this thing play out, see if we do get a squeeze to the upside. And once we've seen a few more candles, once we've gotten through that CPI print, we will probably have a much higher shot at regaining a clear read over Bitcoin again. If anyone is interested, I'll put a link for this PDF in the description to this video. And other than that, please do join us tomorrow for the live. It'll be about 12:45 GMT. Other than that, I hope you're doing well in life. And until next time, take care from me. All the best. Cheers. Bye.
Camel finance, he's the man to see. rocking the markets with his contrarian spree. Trades like a pro, no fear, no shame, sticking to his guns in his money game. He's a badass, oh yes indeed. Camel Finance got the markets key, taking us normies on